Futures searching for direction an hour ahead of the open this morning. The latest look at the labor market shows jobless claims fell to 210,000 in the latest week. It comes as President Trump touted his record on the economy and the market in his interview with Ainsley Earhart this morning. Joining us now is Oxbow Advisors managing partner Ted Oakley. Ted, good to see you.
Hi, Maria.
Thanks so much for joining us this morning. Are you buying stocks, investing in markets as a result of the backdrop in terms of the economy and earnings?
Not particularly, Maria. We're buying things that give us a chance to look at some things that got cheap. For example, back in May when we had the 30-year bond at 312, the 10-year at 312, we actually went in and bought some consumer staples, which they've done well since then. We own various things, but we don't buy anything based on exactly what the economy's doing right now.
Well, what about the retail sector? I mean, you just said the consumer staples. We've had a pretty good run in retailers all week. How would you characterize the backdrop for retail right now?
Well, the consumer's done well, so they've been able to come back to retailers. You've seen that in different things like Walmart, et cetera. I suppose we take a little different look, and the retail for us is a different kind of retail. We own Dollar Tree, eBay, Amazon, those types of retail looks. We don't go for the box stores as much as the others.
Ted, James Freeman here at the Wall Street Journal. My sense is that you're not a long-term bull on the economy, and I'm wondering why you don't see this increase lately in corporate capital expenditures signaling that we may get faster growth for the long haul.
Well, it's where we are in the cycle as much as anything, James. I'm not totally negative, and we just have a little higher cash than we normally have. But what happens is that you come to points in the cycle where everything is peak. And when you get everything peak and everything full, you can't be more full. You're where you should be. Not that you can't stay that way for the next year or two, but usually that's not the place where then you take off and push to another level. And I think we feel like that's where we are now.
And that you think we're at a peak because?
Well, if you look at peak profit margins, you know, peak labor, peak everything, you're at a point where we might primarily work with business owners that are sold companies or business owners in business today. And what I find from them is they're running well. They're doing well. There's not a question about that. But it's hard for them to see how they can add up because they can't find anybody to work for them, and they can't get a move on the revenue side because they need people and they don't have people.
So, Ted, a lot of voters that I speak with, despite the fact that the economy is good, despite the fact that they're feeling all of this, they're still very concerned about the markets, just like you're describing. And yet, for years now, 3 or 4 years, we've been talking about how this might be the end of the run. How do you reassure folks where they should be going if you're saying that this is the peak? What should people do right now?
Yeah. Well, for us, it's where we raise some cash. It's not a ton. I mean, we have about 23% liquid in an all-stock account, and then we run some higher income accounts that are aggressive income, and we stay with those. But we don't do anything a lot differently. It's just that when you can't find things that are really in the zone, we run a screen that we really like of about 200 companies, and very, very few of them are in a zone where we want to buy them. That doesn't mean they couldn't be there. In the next 6 months or so, but that's what we look at on it. We try to find things that are in that particular value zone for us.
Ted, this is Dagan McDowell. This is a story in the Wall Street Journal that bears noting at the moment. So a record number of hedge funds and speculative investors had bet on lower Treasury prices. Ruh-roh. They moved against them, and yields fell, and now they're facing losses. And again, this is a saw that we've heard over and over again for really more than a decade, that longer-term interest rates are going to spike, and you're going to have big losses on Treasuries. Didn't happen. What do you say?
Well, Dagan, if you look at our Twitter account, different things, you'll see that we've been calling for lower rates. If you look at the 10-year and the 30-year rate, they're exactly where they were 6 months ago. Mm-hmm. And actually, the 30-year is a little bit lower. In our income accounts, we're long the Treasury right now. And we think the people, and I know what you're talking about, and the futures contracts are at an all-time record. And we just think they're on the wrong side of the trade. We look for, by the time we get in the first quarter of 19, we think those rates are not going to be the same they are today.
Wait, so you would still go long the 10-year with the yield at 2.82%?
We're actually long the 20 and 30. If you look at the 30-year bond, look at the rate on it. If you want to know where you hadn't lost money, it's been in the 30-year paper. You really would have lost money in the 2 to 8-year paper because that's what's moved against you. But the long paper, and this is what people, I think, are in disagreement with the Fed. They're saying, hey, we don't see any long-term inflation problems.
Let me go back to equities for a second, because you own Amazon. When do valuations start to bother you? I mean, Amazon obviously has had an incredible couple of years. You've owned it for a while?
Yes, we have.
And what's your take on valuation here?
Well, obviously, it's an expensive stock relative to any sort of basic valuation we've used in the past. And you have to look at what kind of market share they have and that type of thing. I will tell you that when we get new money, we don't add quite as much as we have in older accounts that have it at a lot lower cost basis than we would with a new account. But we still add it. But it's just not as high a percentage as it would be normally.
Anything you would sell right here, Ted?
I have to tell you that it goes stock by stock for us. I'm not trying to hedge on that. It's just that we look at various companies. And we think that a lot of the companies are overpriced, but a number of them we don't own. So but, the companies we have, if we didn't like them, we would have already sold them by now.
Sure. Ted, it's great to see you this morning. Thanks so much.
Yeah, thank you, Maria.
Ted Oakley joining us there.